Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, August 8th, 2019. We are again in the last hour of the trading day, and as many of you know, I believe the closing prices are the most valid prices to make my buying and selling decisions from, and that's mainly because that's when the market makers and the large financial institutions take over control of the market from the algorithms during the day, and in my opinion, close the market at the most valid prices. So that is why I make my buying and selling decisions most of the time, majority of the time, from the closing prices. So anyway, thank you so much for coming by today. As always, I appreciate it. I appreciate you spending your time here and investing your time. And I hope that what you're learning from this channel is giving you a return on your time investment. So let me just make sure that everything's working from the technical side. If you guys can hear me okay, please just let me know. We are having a big day today. The Dow is up about 296 points. It's up over just 1%. The Nasdaq is up 155 points, up almost 2%, and the S&P is up 47 points, up 1.63%. So we are having a really nice day, which is good. So all right, well, we've got a lot to go over today. So the format for today, first of all, we're going to go ahead and we're going to run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at all my positions. We're going to take a look at when I bought them, why I bought them, and probably most importantly, how I'm going to manage them going forward. After that, we're going to do a little segment. We usually do it on psychology. Today, I'm going to do just a few minutes on the importance of long-term investing and putting some money away each month, every month until you retire, and the results are pretty amazing. So and then after that, we're going to go through my watch list. We're going to take a look at all the stocks. We're going to take a look at support, resistance levels, ATR channels, MACDs, RSIs, and we're going to see if there are any good setups for us at the end of the day. And what I mean by a good setup is I prefer to have multiple technical indicators lining up to tell me that that is a good signal. Or another way to put it, will these technical indicators that are lining up, the more technical indicators that I have lining up, the way that I view that is the more buyers will come into play. And if you want something to go up, you want to be where other buyers are going to be. You don't want to be buying something when whole groups of sellers are going to be selling. Hope that makes sense. So when I look at technical indicators, I don't look at them just as black and white. This line did this and so forth, right? I look at it as, are there going to be groups of buyers coming in? Because I want to be in the company of other buyers, not sellers, when I buy my stock. I mean, it's pretty straightforward and it's pretty simple, but sometimes I don't think people think about technicals in that term. They just go, oh, this line crossed this line, that must mean that we should buy. They don't really know why, right? So, okay. And then if we find something at the end of the day, I'm going to go ahead and purchase it at the end of the day. And then after the market closes, if anybody has any questions at all about what I discussed today, or if you have any other trading questions, even that I didn't discuss, or if you'd like me to take a look at a particular symbol or anything like that, please let me know, and I'm happy to give you my best opinion and best advice. All right. All right. Well, that is the plan. Hey, JT is here. Good to see you, JT. Thank you for coming by, my friend. It's always nice to see you. Steve Burns is here. Good to see you, Steve. It's always an honor, my friend. It's always great to have you here. You're such a great addition. Steve says, Bears win battles, but Bulls win the war. Bears win battles, but bulls win the war. That's right. There are times where the bears do win, but in the long run, the bulls usually do win and they win the war. Ah, that's good. Good saying, my friend. I know Steve's having a good day today. Big day for Steve, so congratulations. All right, so let's get that legal disclaimer out of the way, and I will be back in about 40 seconds. So hang tight, please. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, we got that out of the way. So, okay. Well, like I said, it's been a great day. It's been a great day for us, for sure. Currently at this moment, which seems incredible to say, but I have made a yearly high today in my trading accounts. Few days ago, if you would have asked me a few days ago, do you think you'd make another high in your account in the next few days? I would say no chance. And, but what do I know? So here we are. So I am grateful for that. I really am grateful whenever I make a new high. You know, it shows that the process is working. You know, it was scary to buy those dips. It always is scary. Everybody wants to buy a dip, but when it actually comes to it, it's scary because there's a dip for a reason, whether it's headline news or financial news, you know. So, but we waited patiently and, you know, we entered when we were supposed to. We didn't know that it was going to rally, but, you know, it was an educated guess because that's really any trade is an educated guess. And just like I said a few minutes ago, my signals basically trigger when I know other buyers might be coming into the market. And so we were right. So anyway, I'm very appreciative of that. I should knock on wood. The day's not over, but it's been such a big day. So Frederick says, hi, Greg. Hi, everybody. You sound better. Oh, thanks, Frederick. I do sound better. Huh? I feel better for sure. The last few days, boy, they were brutal. Man, they were brutal. It took every ounce of energy I had to do this podcast, to be honest with you. So, all right, well, let's get to it then. First on deck is Amazon. All right, so I did buy Amazon back on the 6th of August, and the reason that I bought it is because the previous day we closed below the 250, then we closed above the 250. That's a good back-tested long-term approach to trading Amazon, staying in Amazon while the price is above the 250 on a closing basis, getting out if it closes below the 250. You know, this type of approach does not have a huge winning percentage, but when it does win, it tends to win big, and when it loses, it tends to lose small. And that's the key with all trading, everybody, is letting your profits grow, and however you want to get out of it, whether or not you want to phase, whether you want to look at particular levels above you, rejection levels above you, or simply, you know, on this particular trade, staying in as long as it closes above the 250. Maybe it will close back below the 250, but it will be over in this range. You don't know. But the key is be very disciplined and impatient with your losses, and get out when you're supposed to, and then, you know, have the guts and the fortitude and the discipline to stay in your trades while they're going your way, because that can be just as hard. Again, we did buy Amazon back on the 6th of August at $17.89. We did hit 2 profit targets today, which is nice. I have targeted the 50 RSI up here, which lines up right with the 50 moving average. So if we continue to move up and we reject this 50 moving average, that will be my signal to get out of the trade. To the downside, if we close below the 250-day moving average, that will be my signal to get out. Now, if we move up higher and higher and higher, I probably won't let it go all the way back to the 250-day moving average. If we had another day like we did today, I would probably move my stop from the 250 up to the 5-day as my stop, or a close below the previous day's low. You know, I entered this based upon the close under and the close over the 250, but I'm not trading it mechanically. I just used the mechanical entry as my entry, and then from there I turn it into a discretionary trade because it's a stock, you know. So I hope that makes sense. We're having a really nice day today on Amazon. So yeah, we'll just see what happens. But it is good that we were able to overcome, and who knows right now, but we are over the 5-day moving EMA, exponential moving average here, which is nice because that has not happened for a long time, not since back to July 24th. So anyway, really great trade. Glad we took this trade over the 250. Again, if it would have closed below, we would have gotten out for a small loss. But now we're being patient with it and letting it grow. All right, next on deck is DDM. So DDM, very similar to what I just talked about with Amazon. This is a good back-tested approach of staying out of the DDM when it closes below the 250-day, getting back in when it closes above the 250-day, staying in as long as it's above the 250-day. And in my approach, I like to phase out as it goes my way. So you can see I did hit 3 profit targets today. This is double leverage DDM. I took a half position because it's double leverage, but really it's still a full position because half position of a double leverage is the full position of a normal position. So I am going to trade this mechanically like a robot. Okay, because this is an ETF, it's not a stock. I don't have to worry about earnings. So I will continue to stay in DDM, good or bad, until we close below the 250-day moving average. Or if it goes up my direction, then I will stay in the trade and continue to phase out. Just to show you back here, we took the exact same trade, exact same setup back here on the 6th of June when it went under. Oh, this one was based off the 200, but very similar. Under the 200, over the 200. I was going to stay in this as long as it stayed over the 200 or until I ran out of shares. And I did run out of shares about here. So this was a really nice trade. And so far, this one is acting like a good trade as well. So, but again, this is a robot trade. Very, very easy. Scale out as it goes my way, get out when it closes under the 250. But if it heads up another couple days, I'll be out of 50% of my position. So if it at profit levels, if it comes back, eventually closes below the 250, well, I still locked in a bunch up here, and so the drawdown will be less. So that's why I like to phase. So anyway, this has been a really nice trade so far, up 2.29% today. All right, Google. Okay, so I did buy Google yesterday on the 7th of August, and here's the reason I bought it. So we had this big gap up, okay? This was the prior resistance. Then we were able to break through this. This should act as some type of support, okay? This is kind of big picture. So then we had this huge sell-off. We gave it all back. We had the volatility of the last few days. We rallied up yesterday, and then the day before yesterday, and then yesterday, we went below, but then we closed back above. So this is a V2, right? A V1, right? Here's day 1. Here's day 2. Day 2 washes out day 1. Day 2 closed above day 1. So that is a V1. But in addition, it happened inside the value zone. And you guys know I like to take trades within the value zone, because if you take the trade somewhere in the value zone, the easiest movement you're going to have is from here up to the third ATR channel, or here down to the third ATR channel if you're short. Like, I would not take this trade today. I'll keep it because I have the position, but I would not take this trade today because some of that move is already gone. Luckily, we're in it and we were part of that move. But just, there's a difference between staying in a trade or entering a trade. I would not enter here. We're above the 1 ATR channel. Some of my movement is already gone, and so it reduces my risk to reward. So, and the reason I brought up this previous resistance, which is now support, is that we did test underneath it and was able to break back above it. So this was a good trade. We bought it here at 1175.91 yesterday. Did hit 2 profit targets. It's up 2% today. So really great trade. And in addition to having this higher low V1 in the value zone, RSI was still above 50, right? So if anything is above 50 RSI, the way I look at that is that there is support underneath me with that 50. So I had support underneath me. I had a rejection of the previous day's low. We broke above the 20-day moving average. Everything was great. The only thing is we didn't have MACD, but we had a bunch of other indicators, or MACD go positive, but we did have a bunch of other indicators. So I'm targeting the previous high up here, which is 1268. That also coincides with about a 70 RSI. So the way I look at this is there are probably going to be sellers coming in here. So that's what I'm targeting for. And then let me just make sure of something. Oops. Sorry, I can't grab this. Oh, well, that's no good. Right. Okay. Oh yeah, okay. The reason I drew this line here because it was at the third ATR channel. So this area up here will be a red flag for me if we reject this area as well. Doesn't mean I'm just going to either let it get up here or go back down and hit my stop. This is an area of concern and we'll have to see how it reacts. But anyway, great trade so far on Google. I'm glad I took that trade. MasterCard. Well, this has been a big trade for us, everybody. I did buy this back on the 5th of August. And why did I buy this huge torrential, we're going to hell dip? Well, it wasn't just random. There were 2 reasons I bought this. One, we bounced off the 100-day moving average. So would that have been enough for me just to buy if that's all that happened? No, it would not. But we did go under the 30 RSI intraday on this day, and then we closed back above. So the market tested under the 30, but there were no more sellers down there, and most likely some buyers came in here when it rejected under the 30 and over. I mean, of course they did, because we did, right? So so we did buy here. The RSI level at that time was 31.11. So if we would have been wrong, we would have had a close under 30. We would have had a small loss, right? I mean, that's the price you pay for putting on a trade, is you're having to put up a little bit of money to see what's going to happen. And if we would have been wrong, most likely we would have been wrong in this type of area, this amount. But as you can see, it has moved our way nicely. I have phased out as it is moved my way. Today, I hit 3 profit targets, and I actually, up here, I ran out of shares. So I am now out of MasterCard, and that's just one of the things when I phase out. It's one of the risks I have to take, that I'm gonna run out of shares and it might move higher. And if you didn't phase out, you'd still have them. So anyway, that's just one approach. That's my approach to trading. I really like to take profits when the market gives to me. I think Steve Burns calls it the, oh boy, what's it called now? Regret. Oh man, I shouldn't have bought it up. Regret minimization trades. There we go. So anyway, I am now out of MasterCard from entry to close right here. 7.68% trade. So, really, really nice trade. So glad to have this. Thanks for doing business with us, MasterCard, but I am now out of this position. All right, Merck. So I did buy Merck back here on the 31st of July, and the reason I bought it is we had earnings, it gapped up, came down, but it did hold the previous resistance, which is now support underneath it. I did buy it here on the 31st, even though this was an ugly looking candle, it still did hold the resistance. MACD went positive. We had a 520 crossover, but really what got me off the fence to buy this stock was on that particular day, the market was down really, really low. And I like the relative strength of Merck on that day because it held up when the rest of the market didn't. And so in addition to the technical indicators holding the support here, having the MACD crossover here, having the crossover here, it also held up really nicely in the face of a big down move in the market. So you can see it has been a nice trade for us so far. Hit a couple profit targets here, hit a couple here, hit one today right at the top. So at this point, I have about 50% left, 50% left of this trade. So the key is now, how do I manage it going forward? Well, it's easy to the upside, right? If it keeps going up, I'll keep phasing out until I'm out of shares, like I just mentioned on MasterCard. But as far as to the downside, there's a couple approaches that we could take here. We bought here at 82.99. That's at 84.53. It's not acting that well today. The close is actually below the open. So tomorrow, I'll just have to see what happens, but either a close below the previous day's low, possibly a close below the 5, or the close below the 10. It's hard to say until I see really the price action of the day. But nonetheless, this has been a nice profitable trade. We did phase out a one profit target today, and we'll just have to see how it goes tomorrow. Okay, SPY. So the infamous SPY trade. This has been a tough one lately, but year to date, we're still up nicely. I do buy the SPY each day at the close of the market, and I sell it first thing on the open. So I did buy this yesterday at 287.97, and we did sell it today at 289.62 for a nice overnight profit. It is higher than where I sold it, obviously, but that's okay because that's our approach: buy at the close, sell at the open. So if we have some new viewers here, let me tell you why we do that. It might, on the surface, it might look like, why would you do that every day? It doesn't seem very technical or very precise. And you're right, on first glance, it does not. But this is based upon a back-tested approach from 1993. If you would have bought the SPY at the open, this is the opposite of what I do. If you would have bought the SPY at the open each day and then sold it at the close each day since 1993, you'd have actually returned a negative 13.9%. But if you do the opposite of that, which is what I do, I buy the SPY each day at the close, and I sell it first thing at the next open the next morning. If you would have used this approach, you would have gained 634.2% since 1993. So what does that mean? That means that all the returns in the S&P since 1993 have come from the aftermarket and the pre-market sessions, and then they have been sold into when the market opens. So It's very good information to have. It has a huge edge over time. As you can see, the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. So, where did the move come from? Clearly, it came from the after hours and the pre-market sessions, not during the day. That's why day traders generally have a very tough time, because the movement does not come during the day. It comes in the evening time and in the pre-market. So, that being said, there is an edge in holding stocks overnight, right? And most day traders don't want to hold overnight, but actually the holding overnight is where the edge is. So this is the reason why I do buy the SPY each day at the close and sell it first thing in the morning. So I will be buying this again at the close today, as per usual. All right, last trade is USO, which is oil. So why did I buy oil yesterday? I bought oil yesterday here at 1084. The reason I bought it was because we went down, we tested the 30 RSI. We didn't quite get under it, like we pegged it. So some buyers came in there, and then we also closed back up into over the third ATR channel, and the close was above the open, which is a good sign. And in addition to that, we also tested this deep previous low we had back here back in June, and you can see we went ahead and tested this new range to the downside. There were no more sellers there. So 3 reasons. We tested this previous low and we bounced off. We tested the 30 RSI, we bounced off, and we closed back up into above the negative third ATR channel. So I did take a half a position because we are under the 200-day. Whenever I have a position, take a position under the 200-day, I take a half position. That's just a filter that I have. Stocks and equities and everything else is much stronger above the 200-day. So you can see it is moved up nicely today so far for us. I did hit one profit target. So anyway, really nice day. All right, let me take a look, see if anybody has any quick comments. Vera Music. Hey, how you doing, Vera Music? Thanks for coming by. Hello there. Do you only buy or short as well? I do short sometimes, not often, because, the market is a 50-50, but with an upward drift. So there are structures in the market that do cause it to have an upward move or an upward drift. There are occasions, yes, where I do short, but not very often. I think since I've had this live stream, I think I've made maybe 3 short trades. So the majority of them are long. But not to say that I won't if something really good comes along. We have had some good shorts, but mainly longs. But thank you for coming by, Vera, and let me know if you have any other questions. Steve Burns says, look like SPY, Qs, IWB, and Facebook all finding resistance at the 50-day moving average, and VIX finding support at the 200-day. Yeah, I noticed that as well, Steve, and I was actually wondering to myself how you were going to manage those trades, because I know you have all those trades. So anyway, let me know. I'd be interested to see, but you won't know until the end of the day. But we'll keep an eye on that. Regret minimization with profit taking on the way up. That's right. I was close, but that's what I prefer to do. Murat's here. Hey, buddy. Good to see you. Thank you for coming by. This is Murat from Norway. Max, can you please go over MA profit taking? How many profit targets there was? What was your ultimate target? Isn't per your profit straight at usually 6 ATRs at least? Okay, I will go over that after the market is closed, Max, because that's a little involved. But yes, I will go over. When you say isn't your profit target strategy at usually 6 ATR at least, No, well, it depends. It depends whether or not I'm using it depends where the 70 RSI is. It depends where the previous highs are. It depends whether I'm using a counter trend trade. If I use a counter trend trade, my profit targets are not as high because usually a lot of times counter trend trades fail. But I will go over that, Max, and hopefully we can make some sense of that. Steve Burns says, looks like I will be locking in some profits at the end of the day. All right. Okay, so let's, like I said, so normally I talk about trader psychology. I did want to just do a few quick minutes here. This is from the Joe Money podcast, and you've probably seen things like this before, but I do like this post. This is Joe Money Podcast at the Joe Money Pod on Twitter. You might want to go and take a look at that. It's a good Twitter channel. He posts some good things. But I saw this. I was thinking about Brian. That's our 17-year-old guy that is interested in investing at such a young age, and I'm proud of him. But this is great. This is the cost of waiting. So here you have one guy starting investing at 23. Here you have another guy starting at 32. They both have the same salary. They both have an annual raise of 2%, initial contribution of 5%, and then they have an average return of 7%. So they're putting in 5% of their income. They both get an average return of 7%. The retirement age is 65. This kid started at 23, right? So he started 9 years later than this guy. They're doing the exact same thing. This is what the young guy has at retirement, $1,217,206. This guy, because he started 9 years later, only has $602,296. So it really is important to start investing early and consistently. And so this is what I wanted Brian to see. This is what I want Mount Doji to see, because I think Mount Doji's in his 20s. And then here's another thing, guys. This will make you mad at your parents. Saving $1 a day. How much can you save over the years? So this is saving $1 a day. Can anybody save $1 a day? Yeah, I think they can, right? Maybe not buying one Frappuccino or one Diet Coke or one piece of candy. So if you would have saved $1 a day for 10 years, if you put it in a savings account with no interest, $3,650. All right, you didn't make anything, but at least you haven't, you didn't spend it. If you put it in a money market with a little interest, $3,800, $3,772. If you put it in an ETF like the SPY with fees, $6,361.66. And if you put it in an ETF with no fees, $6,500. Well, that's 10 years. All right, let's say you're 50 years old right now. If you would have put $1 a day away, or your parents had started you off with $1 a day and you just continued to do it, if you would have put it in like in a regular mutual fund with this kind of return, you'd had close to $600,000, right? If you would have put it in a fund with no fees or low fees, $698,000. All right, so I think most people can do $1 a day if they really make it a goal. And I mean, of course, most 50-year-olds wish that would have happened, right? Look at the difference between putting it in a money market account with 1% compared to putting it into the market, $698,000. And what will that be when it's 60 years old or 70 years old? So, if you guys have kids, go out and set something up for them. You can see, I mean, $1 a day for a newborn baby by the time they're 50 with this kind of return, close to $700,000. But what about if the market drops in half? What about if it doesn't get that return? Well, maybe they still have half, right? It's more that you're going to have anyway. So I did want to share that with you guys. If you have kids, set something up. If you're in your 20s, 30s, put something away. It grows. You don't have to have a lot of money, and you'll be glad. I promise you, at the end of the day, you'll be glad that you've done this. I've done this with people many years ago. I literally had to put them in a headlock for them to take, an hour to set this up, have it come out of their accounts, and they thank me every time they see me. So it's good advice, and put something together. especially if you have kids. Put the sinking dollar a day away. Murat, is USO ETF? I usually buy and sell using CFD whenever I trade oil markets. I guess there's other ones, but USO is kind of the main ETF for the price of oil. 770 is roughly doubling period, so 7% return in a 9-year. Yep, that's right. PAMIQ. Hey, how you doing? Thanks for coming today. Looks like it's going to close higher. We shall see, right? We shall see. All right, well, let's get to it. See what we have today. Apple. 49.88. Looks like it's bumping into some resistance at the 50. I was considering taking this yesterday, but I liked Google better. I'm concerned about this area in here. It's about halfway from this move. We're up against the 50, so nothing on Apple today. Silver gapped lower, closing a little bit higher. This is too high for me. I'd like to have a 520 EMA cross under and then back over to get into the trade. This is the same signal we used back here on the 10th of July when we went under the 20 and back over the 20. You can see this was a beautiful, nice trade. I phased out. I ran out of shares here. By the way, it's lightning and thundering here, everybody. So if I lose you, if the electricity goes out, that's just going to have to be it for the day because it's going to take so long to get everything back online. So I just wanted to let you know in advance, if I get a power surge and it goes out, then that will just be it for today and I'll see you tomorrow. But hopefully that won't happen. Okay, so yeah, we took the 520 cross here. We had a nice move up. I ran out of shares. It did go higher, but it had to go through a lot of sidewards movement, but it's too high for me right now. Advanced Micro Devices had a huge day up. There was some news that I think they're going to provide processors for Google and Twitter. Obviously, this would have been the one to buy yesterday, but we didn't know the news was going to come out. So if any of you have AMD, I think Ramble Ron's a big AMD fan, so I hope that Ramble has this. But nothing there today. Amazon we talked about, 3842 RSI, so it did not test any major support or anything, so that looks fine. Boeing had a nice day up yesterday. You can see we did poke our head below the channel twice, back up, has moved up. It's over the 5-day, but nothing that I want to buy there today. Alibaba has had a nice rally off the bottom. I would imagine it's really going to find some resistance at the 200-day moving average here. It's halfway of the move, and you're probably going to have some sellers coming in here anyway, so nothing there. Caterpillar I think it went under the 30, back over the 30 yesterday, but that was a standalone signal. It's up a little today, not much, so nothing there. DDM, of course, we have DDM. That is a mechanical robot trade that I took with a close under the 250, back over the 250. So this is mechanical. I'm going to stay in this until I'm either out of shares to the upside or a close under the 250. Walt Disney really had a big gap down on earnings, did gap up today. Currently, the close is below the open, which is not exactly positive. So nothing for Walt Disney there. Etsy had a big day up today. Nothing there. Ford Motor Company has a V bottom there, 44 RSI. There's nothing there. Facebook, this was a great trade. I was considering taking this here the other day, but I took Amazon instead. I didn't want to have too much tech, but intraday we went under the 30 and we were able to close back above the 30, and this has moved up nicely. Steve bought this trade right here at the close. If I were in this trade, I would be looking to see if we were going to reject this 50-day moving average, and I think that's what Steve's looking for as well. I don't think it hit the 50 yet. It hasn't hit the 50 RSI yet, but I know, if I were in this trade, I would be looking for some kind of rejection here, and I think that's what Steve's looking for as well. So I'm certainly not going to buy it here today. Five Below, just V bottom I'm not a big fan of V-bottom, so nothing there. Gold is actually up today. I need the 5-day to come back below the 20 and then back over for another valid entry or a move back into the value zone with the V1, V2 entry. This is another example of the most recent trade we took on gold when we had the 5 EMA under the 20 and then back over. And we did enter here. We had a nice trade. We phased out all the way to there, but nothing on gold today. Google, we have up 2.42% today. So there's no issues here for me to want to sell this. You know, going forward, how am I going to manage this? Yeah, you know, at this point, we have moved more than 1.5 ATR. If it keeps moving up, I'll continue to phase out. Probably if we get, you know, I may use that 10-day as my trailing stop at this point, or at the very least, if we get back to the break even. So, you know, still make it a profitable trade with the lock-ins here at higher prices, but we'll just have to see. Goldman Sachs having a nice day today. Nothing there. IBB is finally rallying, but nothing there. On IBB, I'm waiting for a 5 EMA to cross back above the 30 EMA. That is similar to what I just showed you on gold and silver, but it's not there yet. Intel is a potential. We do have a bullish engulfing bar, which means we went lower and higher than the previous bar. We did technically have a V1, but not a very good one. It only took out yesterday's low by 1 penny. But we did have a nice V2 here today. The only issue now is that we're at a 41.96 RSI. We have the 50-day above us. We have this gap down day. Within 3 days, it did not fill the gap, which is a little concerning. So, you know, you could buy this. You could buy this here and use about right here as your potential, as your end of day close, because it's halfway of the washout bar. But I think I am just going to let Intel go. IWM had a close under the 200, back over the 200. So let's look real quick at etfreplay.com and see how that back tests. So, you know, getting in IWM when it closes back above the 200, staying in it, and getting out when it closes under. You know, it only returned 98.1% compared to buy and hold 291.6. Had a pretty much better on the drawdown than buy and hold, but with that said, I'm not going to buy it. I don't like the risk to reward ratio. You know, we had the 50, we had the 50 RSI here. The risk is not as great as what the reward is not as great as what the risk would be. Johnson & Johnson. Johnson & Johnson's kind of interesting here in a way. We had a V2. We took out this fractal. MACD is now positive. We're back in the value zone. I don't have any exposure to consumer discretionary type of stocks right here. So I am interested in this one. It's a higher low compared to this low. We do have a V1. We did finally close above the 10-day. MACD is positive. We are in the channel. We did trigger a fractal. We are under the 200-day, so I will be buying Johnson & Johnson at the end of the day, a 1/2 position. So that one is looking pretty certain. Coca-Cola, nothing there today. I missed out on this V2 here, day 1, day 2, day 3, day 2 washes out day 1, but we did not close above day 1, so I did not take the trade, but it did move nicely. Max, here's Max's trade. Here was a valid V2. I didn't take it. Obviously, I wish I would have, because that's moved nicely, but good call, Max. On this day here, Max called that. So, but we did have rejection of the 50. We did have V2. We were a little close to the 1 ATR channel. That's what scared me away from it, but it certainly moved up. So I hope you have that, Max. MasterCard. We have MasterCard. Again, we bought it here on the 5th with the rejection of the 30, the rejection of the 100, and we have moved up nicely. I did scale out. I am out of MasterCard here, so I am now out of the position. Our Merck trade, we talked about that, did buy this back here. It's doing fine. I don't want to do anything with it unless we lose trailing moving average to, moving average to the bottom, or we close below the previous day's low. So nothing there. Microsoft, big day. Nothing there. Netflix. You know, Netflix is kind of interesting here. We did make a lower low. We did trigger a V2 here today. Has not closed above the 10-day. You know, if we had a bullish divergence here with red bars, green bars, and then lower red bars in this particular setup, I would take this, but I don't think I'm going to take this today. If we came back down and got closer now to the support here, I would consider taking that right now. But you know, my reward is up to the 50 RSI. My risk would be down to the, so it's about a 50-50 risk to reward here, and it hasn't been able to move above the 10-day. So I am going to let that one go. How much time we have? We only have 14 minutes. Nike, that would have been a good buy 2 days ago above the 200-day. I actually did buy it here when we had a 30 RSI and the 200 convergence, but it puked on me the next day, so I did have to take a loss. I didn't get back in, but nothing today. Philip Morris, I was considering this yesterday with 2 rejections of the 200, but I didn't buy that. Nothing there today. PayPal is actually negative today. Interesting. So nothing there. Qs are doing stunningly. Looks like we are closing above the 50-day moving average, but it'd be interesting to see what happens with the 50 RSI and how it handles that. So nothing there. Snap, okay, so listen, you know, here we make this high, we give it all back, we do stabilize for a couple days here, we have a rejection to the downside, a washout bar, and today we are triggering a really nice V2. However, it's too high in the channel for me to buy. See how we're right at the 1 ATR channel? There is going to be resistance here. That was the high of the day. You know, I would take it 3/4 up to the channel. I would take it maybe to here to give me some room. But, you know, this is 1 standard deviation away from the mean. So there are going to be some resistance there. And it's exactly what happened. So I was looking at this. If it would have triggered like right here, I would have bought it because it would have given me more room to the upside. But now we're right there. It's just too high for me to buy. But RSI is 58. That's good. It's still not overbought. So, and it did, it did retake this previous resistance, which lost support, but now we're back above it. So it should have support. So I'm not going to buy anything on Snap. Huge day today. And besides, I have Amazon and I have Google. SPY, we had the overnight trade. Does look like it's above the 50-day. That's good. But with the overnight trade, there's no technicals to it at all. It's just buying it at the end. So I will buy it at the end of the day, 10% position size. Square, a little bit of a rally here. Did go under the 30, back over the 30, which is positive. Not much volume. You know, you could buy this with a stop under the 30 RSI. Let's take a look at the weekly. Weekly caught support at the 1 ATR channel, negative 1 ATR channel. That's good. I think I'm just going to let that go. SSO is double leveraged. Bonds, we talked about this big reversal yesterday. It actually closed higher than the previous day's close, but it closed much lower than the open. And I told you that's somewhat of a bearish signal. I thought that was good for the market. We'll see what happens. You know, someone had just asked me about shorting. You know, if we got back up to the halfway of this big down bar and failed here, I might consider it there, but not now. Tesla. Having a nice day today. Is above the 50 RSI, but nothing there. Twitter, nothing there. UNG, nothing there. UNH, United Health Group, basically would have to get above the 200-day for me to get back interested in that. Oil, we bought that with the rejection of the 30 RSI, closed back above the open, closed back up into the channel. So we did hit one profit target there. You know, technically right here at this point, this is a V2. Day 1, day 2, day 3, day 2 closes or washes out day 1, and right now it looks like we're closing above, but again, this is a little too high in the channel for me to take, so I'm going to let that one go. VIX, you know, we had this huge move up. We actually bought this here on this V2 under the 30 back over. This was a huge trade for us, scaled all the way out, ran out of shares about here. But as Stephen Burns just said, if you look at the VIX index, you see how we moved up and we're now at the 200-day. It looks like we're slightly below it, which is actually good, but if it bounces off this 200-day and catches support here, I would not consider that good for the market. So that's, you know, one thing to consider here at this moment. Does this mean I would go ahead and buy VIX right here? No, I don't think so. Not yet. Maybe down in this range I would consider it, but nothing on VIX. Verizon, nothing there. Walmart had a nice bounce off the 30 and back up. Nothing there. You know, I gotta say, I kind of like energy here. We went under the 30 yesterday, back over. It's kind of a big bar. I understand that. But we did test, yesterday we did test the prior low, as with oil. This is an ETF of the energy companies. We did have a valid V2. We are back up into the channel. We went from under 30 back over. It's a bit of a big bar. However, we are under the 200-day, so I am going to take a 1/2 position on XLE today as well. My target will be a 50 RSI, or the 50-day moving average. And my stop will actually be halfway of the washout bar, which will probably dovetail pretty closely with the 30 RSI. So right about here, right about there would be my stop. So if this closes under the 5-day today, I'm not going to buy it. But okay, so this is a potential. Financials, nice bounce off the 200, but nothing there. Real estate, woo, big day real estate today. Awesome. Utilities had a nice day today. It's too high. I actually did buy here when we had this nice V2 in the channel, but it dumped on us. So this was actually a losing trade, but nothing there today. Healthcare had a nice day. Rejection of the 200 several times, and pharmaceuticals having a big day. I mean, they've really been down in the dumps. Thing I don't like though is that we have this previous low, we rallied, we went super low, now we've rallied back up. We've been able to close back up into the old range, but it took a long ways to get there, so I'm gonna let that one go. So what does that leave? That leaves Johnson & Johnson, half position. Energy sector. Let me take it. Yeah, I mean, we did reject that low. Volume's not good. All right, I'm going to let it go. We do have oil. So my my only position that I'm going to buy today is going to be Johnson & Johnson, a half position based upon the move over the fractal, the V2, MACD positive back in the channel. So I'm going to go ahead and just enter in my order right now for J&J. Again, it's only a half position because we're under the 200-day moving average. So I'm going to put a market on close order with Johnson & Johnson right now. Get that out of the way. Market on close. All right, so I have two market on close orders to buy my regular 10% position size of the SPY at the close, and to buy Johnson & Johnson, again based upon this valid V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1's close. We also took out this fractal. A fractal is a high with two lower highs to the left, two lower highs to the right. Happen within the value zone. My initial stop on this is going to be halfway of the washout bar, so about right here. Probably my initial profit target will be up at the 200 day, so that will give me at least a 2-to-1 risk to reward. So okay, so those orders are in. Let me just double check. J&J and SPY, yes. All right, so let's look at our other positions, see if anything needs to be done with those. Amazon hit 2 profit targets. It's fine, no worrisome signs there. DDM, this is the mechanical trade over the 250, 3 profit targets today, so that's great. Again, no discretion on this trade. I'm just keeping this trade and phasing out as long as it goes my way, or a close below the 250. Google, well, it's moving in there, possibly to that third profit target. Who knows if it's going to hit it, but everything looks good on this chart. We're above 50 RSI. We have the moving averages below us. Everything looks good here, so nothing to do on that. MasterCard, I phased out of there at that last profit target. So this was a great trade. Thank you, MasterCard. Appreciate that. So SPY, what a day. So SPY is over the 50 and over the 10 at the moment, has not tested the 50 RSI above it. That will be interesting. And then oil is fine. Moving our way on oil. So that's it. That is it. And then as soon as the market closes, guys, as soon as the market closes, if you guys have any questions, please type them in the channel or in the chat, and I'll do my best to answer them, clarify them for you, and then I'll go over some of the questions that people already have in here as already. Okay. All right. Well, we are rallying into the close. It looks like Dow Jones is up 362. What a volatile week. Unbelievable. Unbelievable. Yeah, new trading high for the year. I'm very grateful for that. But, you know, why I'm grateful? I'm grateful, you know, it shows that the process I use works, which is mainly managing risk, letting winners run, you know, looking for setups, but if you're wrong, getting out quickly, and, you know, having the patience if your positions move your way. All right, so we got about 15 seconds. I'm going to buy Johnson & Johnson at the close, SPY at the close.
Order filled.
Okay.
Order cancelled.
So we bought SPY at 293.62. 92, 93, 62. So that is our new position on SPY. Okay, MasterCard, that was a great trade. We are out of that trade. So I'm going to replace MasterCard with J&J. That is our new one we got here. And I haven't got my fill back. Haven't got my fill back on that one yet. So listen, before we get into the answer section from your questions, let me just put in my quick plug. Do this every day. I hope you guys don't mind, but I do want to let everyone know that I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. I really like to teach. I've had really good success with my students. You know, I've taken losing traders. 131.68. I've taken losing traders into winning traders, which is the goal, and I'm sure I can do the same for you. You know, what we do here is important, and I hope it's helpful. But you know, one-on-one lessons are always better because it's one-on-one. And probably the most important part is that after I teach it to you, I need you to teach it back to me. So that I know you have it, and I'll throw you a lot of curveballs. We will look at a lot of examples. I'll have you break down the charts. I'll have you teach it back to me, and I won't let you go until you have it, right? So you know, just so you know what that looks like, just reach out to me. My hourly rates, my email are in the description of this video, or you can send me a message on Twitter. But generally, you know, it just starts with a free phone call or a free Skype call. I just want to know more about you, about your trading process. You know, what your challenges are with trading, what your goals are with trading, and then I'll create a customized lesson plan for you based upon what your goals are, how much screen time you have, what your financial situation is, what your risk tolerance is, all that kind of stuff. So, you know, I think you'll be happy if you do get a lesson with me. So if it's of interest, reach out to me by email or on Twitter. And then lastly, if you like this channel, I hope you will subscribe to it. And then if you like this video, if you're learning something from this program, from this podcast or live stream, whatever you want to call it, please do me a favor, hit the thumbs up button. It helps Google promote the channel more. It gets the channel out to more people. And, you know, the reason I started this channel, honestly, was to help people trade better and not to lose money. And there's a lot of people out there that have that problem. And I know if people watch this channel consistently, they'll start to pick up some good trading habits and hopefully stop the bleeding of the money and hopefully make money too. So you can help me do that by hitting the thumbs up button. So, all right, well, there's my plug. Market is closed, yearly high, things are good. And I hope everyone else out there is doing well as well. So, all right, well, let's get to some of the questions here. Let me scroll back up to where we started. All right, Max. So on MasterCard. Now, I bought this here. So when I bought this here, I see the problem is I cannot move this around now because I can't move my what if tool. But essentially, you know, we were at a 30 RSI. Okay. In order for me to phase out, I phase out every 0.45 ATRs. So right now an ATR is 2.69%. Sorry, $2.69. So every time you see me with profit targets, you see how here is my entry. You see how here's one profit target. Here's another profit target. So 0.45 is $12.04. So from yesterday's entry, I put one profit target, $12.04 higher, another profit target, $12.04 higher. Tomorrow, maybe the best way for me to show you this, it won't be on MasterCard, but it will be a real life situation here. So Max, tomorrow, okay, I'm going to get rid of these profit targets because we already hit them. So when I do the math on this tomorrow, I first want to go up and I want to look tomorrow where the 70 RSI is going to be. So I use my tool and I'll find the 70 RSI. 68.50, 68. So right about there. Okay? So I always look where the RSI is going to be the next day. Now, I hope this isn't going to confuse you, but my ultimate profit target is always the 6 ATR channel, right? I have to have a destination in order for me to do the math. So I'm going to have 3 areas here that I'm interested in. My ultimate profit target was the 6 ATR channel, the 70 RSI, which is also an important level, and the previous high. That will be a red flag area. So I have 3 areas here, but essentially what I'm going to do is I'm going to measure from today's close up to my ultimate profit target. You can see it's $89.22. What I'm going to do is I'm going to take this number and I'm going to divide the amount of a 0.45 ATR, which is 1204, into that. So I'm going to take 89.22 divided by 0.45 ATR, which is 1204. That gives me 7.41 ATR profit targets. Okay, it's not always 10, it's not always 6. It depends on where the 70 RSI is, and it depends what the volatility is. So again, I measured from the close to my ultimate profit target. That's 89.22. I divided what the 0.45 ATR value is 1204 into that. That gives me 7.41. So let's say right now I have 100 shares. Now I'm going to take 100 shares. I'm going to divide it by what that number I just told you was, 7.41. That gives me 13 and a half, basically 14 shares. So I am then going to add on. Now remember, from the close, 12.04. So the close right now is 1206.19 plus 1204. My first profit target will be $1,218.23. And then I'll add another ATR onto that, plus 1204, 1230.27. And I'll add one more because I always add 3, plus 1204, 1,242.31. So you guys will see tomorrow where my profit targets are. And this, I usually do this at nighttime, but I'll just do this real quick. 1218.23. That will be profit target number 1. Profit target number 2 will be 1230.27. And then profit target number 3 will be 1242.31. So now remember, I have 100 shares, right? I will sell 14 shares here, 14 shares there, and 14 shares there. So 14 times 3. So if I don't have 100 shares, but if I'm just example, if I had 100 shares here and I hit 3 profit targets, I would be out of 42% of my position. If it keeps moving up, great. I'll see how it reacts around this previous high. If it were to reject there, I would probably get out of the rest. If it fails at the 70, I would get out of there. Or if it actually goes all the way up to here, just because of the math of the formula, I would just be completely out. Now, you can do this an easier way. Mine's a little complicated. I designed this from scratch, so it kind of has my own idiosyncrasies in it, meaning that the closer I get to my profit target, the formula adjusts for that and takes out a bigger position each time. But what I just told you is if you use like the 6th ATR channel, No, I'm sorry. That would make it complicated. If you were basically just to phase out 10% of your position, this is the easier way. If you have 100 shares, you have to find out what 0.45 equals as far as dollars. 0.45 ATR equals 1204. The simple way is just to put your profit targets just like I did. Just take the close, add 1204, add 1204, add 1204. That gives you your 3 profit targets. And then without having to do all this other mess up here, you can just get out of 10%, and just use a standard 10%. Now, if I'm you see how the profit target is pretty high up here, because I'm going with the trend here. Like on oil, do you see how my initial profit target here is not so long? There's not as much profit target because this is a counter trend. So on this, here's the 50 RSI. That's my initial profit target. Just like I showed you on the other one, the initial profit target was 70. My ultimate profit target here, because I have to do the math, is the 200-day. But I'll do the same thing tomorrow, right? I'll take the distance from the close of today up to my profit target. That's 98 cents. Now what do I do with the 98 cents? 98 divided by the value of the 0.45 ATR. So I have 98 cents. And now my calculator's not working. 98 cents divided by 15 cents. That gives me 6.53 ATRs to my profit target. If I had 100 shares, 100 divided by 6.53, I would be getting out of 100 shares divided by 6.53, I would be getting out of 15 shares at each profit target. Where will my profit targets be for tomorrow? Well, again, I have to take the closing price, 1096. 1096, the ATR, 0.45 ATRs is 15 cents. My first profit target will be 1111 plus another 15 cents. 1126 plus 15 cents. 1141. So tomorrow, you guys will see, it will be right here. My profit target's going to be 1141. Oh, sorry. Okay. 1126, 1141, and 1111. Okay, and I'm using these other profit targets up here to determine how many shares I get out, but I know for sure this is where I'll get out. But if you want to do it the simple way, just add your 3 profit targets and then just take 10% of whatever you have. If you have 100 shares, get out of 10 here, 10 here, 10 here. So I know that was kind of quick and dirty, Max, but I hope that helps. I know it's a little complicated, but I hope that helps. Steve says, okay. Steve says, looks like I'll be locking in some profit targets at the end of the day. I don't know if he did or not. Murat, we talked about the USO. Murat talks about the 777 rule. Snake Trader, hi there. Joseph Burns recommended me to your channel, loving it. Oh, good, thank you. Let me ask you, how much capital is required to trade with your methodology? Steve says right underneath, 25,000 is enough for my system. Yeah, and I think you need 25,000 for the day trading rule. It's a tough question because to kind of maybe be an active trader, yes, but if you don't have 25,000, it doesn't mean that you can't take an investing approach. Maybe just not so much of an active approach because you have lower amount of money, your commissions, it's going to make a bigger impact on that. Using a long-term back-tested approach, you don't have to have that much money at all. But if you want to kind of do what we're doing, yes, I agree with Steve. 25,000 would probably be probably be the minimum. But don't let that dissuade you if you don't have 25,000. You can use a long-term trading approach where maybe you trade once every 2 months or something, right? And just beating the market. So hope that helps, Snake Trader. Appreciate you coming by and hope to see you again. Max B. I don't know if it's supposed to be, but both ES and ZN went up today. Sometimes it happens. Sometimes it happens. TLT. Oops. Yeah, TLT was up, but I'll tell you what, I'm a little leery of this chart. We had this big move up, we had this huge reversal down. To me, this looks more like a reaction, kind of knee-jerk reaction. The big volume was on the way down. We did go up today a little, but on lower volume. So we'll see what happens. Johnny says, thanks, Greg. Have a great day. You too, bud. Thanks for coming. Appreciate it. Oh, hey, what did Johnny's... I forgot the symbol. Was it Kroger? No. You had a great trade yesterday. I can't remember what it was now. Snake Trader says, where can I send you or get more information about the mentoring? You can send me a message on Twitter. It's at Gossett Trading. Or my email, Snake Trader, is in the description of this video. It's gregory@gossettrading.com. So, but it's right below in the description of this video, Snake Trader. You can send me an email, or like I said, just send me a message on Twitter, and I'll get back to you for sure. Frederick, Greg, you hit only once your emergency stop since January 1st, right? No. I hit an emergency stop on IWM here, and I hit 2 emergency stops on oil. I remember that vividly. Here and here. I know this one for sure. This one I'm not sure. No, I don't imagine I would have taken that trade. Maybe it was just once. Yeah, I guess. Yeah, it was once. Yeah. I bought here at the support of the 200 with the low RSI, and then it dumped 5%. So my emergency stop's 5%. So yeah, it looks like twice this year. Once on oil, and then once on IWM yesterday. But the good thing about that emergency stop on IWM, if you guys remember, is I scaled out of about 60% of my position here. So, I went from my emergency stop is always 5% below my entry. So I did hit the emergency stop, but it was only with 30% of the remaining position. Max says, well, the Google one, I understand. I watched the profit target video, but it seems to me that MA didn't hit the 6 ATR ultimate target, and it didn't have any weakness, but you ran out of shares. Yeah, I mean, again, this was I set my ultimate profit target closer than I normally would have, so I'm going to phase out of more. I believe I was phasing out. You can see here, right? I can just tell you right here. Here we hit because I set my profit target closer. The amount of shares I'm going to sell is more. A lot of the times in uptrends, I'm taking out 10%, 12%, 13%. But if if I have a deep dip and I have all this resistance above me, I'm going to put my ultimate profit target much closer. And the closer I put my ultimate profit target, the higher percentage of the shares I'm going to sell at each profit target. So, here's 3, here's 4, 5. I think, was there 2 or 3? I can't remember now. Yeah, I guess that was 3. This is probably 2. That's 5. And then I hit the rest of the day. I mean, let's say I was getting out a 15%. Let's see. 3, 4, 5, 6, 7, 8. Right? There's 8 profit targets there. So if I was at 11, let's see. Yeah, let's say I was getting at a 12.5% position at each profit target. I just hit 8 of them. See how I'd be out of 100% of my position? Murat says, why 0.45 ATRs? Why not 5? That's a good question, Murat, and I put a lot of thought into this. So, okay. You know how on the ATR channels, we're going to find some resistance here, we're going to find some resistance here, we're going to find some resistance here at the third ATR channel because they're 1, 2, 3 standard deviations away from the mean. You know, a lot of stocks trade in dollar increments. Like from 30 up to 35.50, they're going to find some resistance at 35.50. Then they're going to find resistance again at 36. And it's the same with ATR channels. From one ATR channel to the next ATR channel, you're going to find resistance. But if you break that down, cycles within cycles, you're going to find some resistance at 0.4, at 0.5 ATR, and then you're going to find some resistance at 1 ATR. You're going to find again another resistance at 1.5 ATR, and then again at 2 ATRs. So the reason I picked 0.45 ATRs was it was just slightly under before that half ATR resistance is going to come in. So I want to get in before everyone else starts to see the same thing. And then if you take 2 ATRs, 2 times 0.45 ATRs is 0.9 ATRs. Again, it's before the 1 ATR. So I hope that makes sense. It cycles within cycles, and it's just before it shows up on everyone's radar screen at 0.5. I used 0.45. Frederick says, Greg, do you think it's a good idea to use leverage if you do not have enough capital to trade? My answer to that is no, Frederick. I mean, you know, it's fine for some people to use leverage, but you have to be really, really careful with your stops because that leverage cuts both ways. And I think it depends on how much experience you have. For a beginner, I do not recommend using leverage because, you know, the more leverage you have, the more emotions in the trade. The more emotions in you trade, probably the worse people are going to trade it. Yeah, I mean, I think the best answer to that, Frederick, is I don't think it's a good idea to use leverage unless you really have some experience. But I mean, listen, you're turning out to be a good trader. I've seen your trades. I've seen your setups. I think if you don't have enough capital, Frederick, I would probably take maybe some longer term approaches like I mentioned a little while ago with some longer term moving average crossover trades that are not going to beat you up with a lot of trades and a lot of commissions, things like that. Yeah, we should do a Skype call or something one time, Frederick, and just so I can get a little more understanding. I mean, I want to help you out, but I have to have a little more, you know, information, specific information about your financial situation, which I don't want to do here in the live stream. So Johnny says it was KR. It predictably dropped today. Oh, that's right. KR. Yes, it did. But I think Johnny got out, right? I think he got out. You told me yesterday. Max B says, okay, got it now. Thank you for your explanation. Okay, I hope it helps, Max. Let me know if you have more questions. It's a difficult topic. I mean, it's not difficult for me because I developed the system, but I can understand how at first glance it's different, and it varies. I mean, it's not set in stone. It's not black and white. You have to pick particular profit targets and that changes all the ratios around. Stock Trader says the method of buying the S&P at the close and selling and sell and buy every day, could it be applied to futures? No, because the futures trade all night long, Snake Trader. The futures market is what's bidding up the prices for the S&P. So it would not work for futures because, the regular stock market closes and then it has all night long it's closed and then it opens in the morning, and that's where your gain comes from. But the futures trade all night long, so no, it would not work. Okay, thanks. Frederick says, thanks for sharing your point of view. Okay, more long term. Yeah, we should do a Skype call, Frederick, and I can help you out with that more specifically. Johnny says, yes, got out 12% profit. Nice, buddy. Good for you. Johnny has some monster trades, man. He's got like the golden touch. Frederick says, if I hit USA, I'll visit you. That would be great. I would look forward to that, Frederick. I hope you do. Murat says, I got your 0.45 approach. You want to be on the safe side. Yeah, because 0.45 is right before the 0.5, which there's going to be some inherent resistance there. And 2.45 is going to be 0.9, which is a little early before the 1 ATR. So you got it. Yeah, you got it, Murat. I spent a lot of time working on that, and it's really worked out well. Excuse me. Well, I only had to cough once or twice today, not 9 times like yesterday. Apologize for that. All right, everybody. Well, listen, Murat, thank you so much. Good seeing you, my friend. Frederick, good seeing you. Johnny, thanks for coming. Snake Trader, good to see you. I'm glad you came back. I think you've came back. I remember seeing your name. I hope you come back. Max, thank you. I hope that helped with the profit targets. If you have any more questions, let me know, and we'll try to get back at it again so we can get this ironed out. Steve Burns, thank you so much, my friend. I know you had a great day today. Congratulations. Such a great trader. If anybody has not subscribed to Steve on Twitter, please do so at @SJosephBurns on Twitter. And he has a great website, newtraderu.com. It's always an honor for me to have Steve in this chat room. I mean, he's such a legend and so well-known author, trader, educator. It's great to have him. Sorry, I'm probably butchering that, but thank you for coming by. I appreciate it. And did I miss out anyone? Vera Music, thank you for coming by. I think it was your first time, so hope to see you again. And JT, how's it going with JT? Good to see you. Hope you come back. Be interested to hear about some of your trades too. So Frederick says, in these big down days, it looks like you try to catch the bottom, no sideways before the entry. Am I right? Yeah. Well, I always like sideways better, Frederick, but the sideways movement is more for the V1, V2s within the value zone. These deep dip buys that we're buying under the 30, back over the 30, rarely are you going to have sidewards movement with that. So it's kind of a different approach. I mean, we have deep dip buy approaches, we have crossover approaches, we have moving sidewards in the value zone, V1, V2 approaches. So, there's all sorts of different approaches. So don't conflate the two, right? So, but yes, like MasterCard. Right? MasterCard, no sideways movement for sure. This was strictly a buy, because a dip buy, because it rejected the 100 and rejected the 30 and closed back above it. So yes, I'm aware it's very deep dip buy. Totally understand that. And that, don't confuse that with like a Coca-Cola where we go higher, we move sideways, then we have the V1 or the V2. I do need sidewards movement on something like this, but not on a deep dip buy. Hope that helps. All right, everybody. Well, listen, thank you for coming by today. I appreciate it. I hope everyone's doing well. Go out and do something nice for somebody today. It's always good for you, and it could be good for them. And hopefully we will see you tomorrow during the last hour of the market on Friday. So thanks again for coming, and we'll see you tomorrow, hopefully. Have a good day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.